Okay, good morning, folks, and welcome to Member Stock Chart Request. This is where we review the symbols that our members submit for me to review. Let's begin with a quick overview of the markets this morning. It is at current 5:20 a.m. Eastern Standard Time, and this is the dollar. The dollar on this 4-hour chart, these will all be 4-hour charts for the pre-market update, is trading out and above this pennant formation, but just this new period here just began only a few minutes ago, 20 minutes ago, and this prior 4-hour bar here flashed a bearish key reversal. So net on the morning, the dollar is looking weaker. But when you take a look at gold, you'd expect it to be doing well, but it's not. It's rolling over. The last time I looked, it was up 90 cents, which is up at the margins, but now it's even up lower than that, up 10 cents on the morning. So not a pretty picture here with gold. What do I attribute it to? Simply take a look at this 4-hour chart of the 10-year U.S. Treasury note. And we broke down out of this pennant formation. We're trying to rally back right now, but this is going to act in the short term anyway as a headwind for gold. Longer term, we're bullish on gold. Short term, we have some concerns. Even after yesterday's bullish key reversal, we really need to see a breakdown in the dollar. Members, more to come. Let's get to the S&P futures. We're showing some strength this morning on the futures. We booked our profits to the short side on Tuesday, and we are rather satisfied that we did because we saw an up day in the market yesterday, and we appear to have a up morning this morning. But beware the bright green futures. Let's leave things off here with Bitcoin. Bitcoin is looking really weak here. We're down nearly 6% on the session and trading down below the 10,000 mark. Let's go to a weekly chart, daily chart. If we break down below 9,225, which I think that we're going to at least retest, we're going a lot lower if we close down below it. This is not a pretty chart. We continue to put in lower highs and lower lows. This one support level from back here is now acting as a declining ceiling on Bitcoin. So I would certainly avoid to the long side because the path of least resistance is down. Okay, let's get to the symbols that our members submitted for me to review. U.S. Steel, we booked profits in our long of U.S. Steel last week. Why? It's because we had hit the upper band of resistance. And I warned, when you hold a profit into resistance, you're hoping when you should fear, especially when it's on a weekly basis. It's a very, very hard level to get through, this upper band of resistance. So we booked profits, and the plan was, while we were still bullish on U.S. Steel, to buy it back on a close above resistance. Sure enough, sellers moved in with the market getting weaker and took the shares down. We're down a little over 8.5% on the week. So our profits from the prior week would have been wiped out if we held. So now what we're looking to do is we're looking to buy U.S. Steel at lower prices, and I think we're going to get them. Now, longer term, we remain bullish, but right now it's a matter of finding a support level that's going to hold and then watching for a breakout on an intraday chart, meaning a 2-hour chart, a 4-hour chart, and then adding more on strength. And then once we get above this upper band of resistance or this week's highs and close there, well, then we'll be aggressive buyers of U.S. Steel, but not right now. It's simply a watch. CWEB, this is the Direxion China Internet Bull ETF. It's looking good. I mean, this really goes to show you it pays to wait sometimes. We got overbought. We were leaning into the third standard deviation Bollinger Band on this weekly chart in red. We are now bull flagging out. We're relieving the overbought condition. Daily chart. We are now retesting the lower band of support. Ideally, we get a pullback to this level here, $62 per share. I think that's a good risk to reward entry point. Watch for a consolidation. I would use a stop right below that level. If you're going to scratch the itch, open up a small position. Stop out right below that level, because if it breaks, it's going down to 58.52. Volume yesterday was strong, but we closed well off the highs of the day. So you saw some selling pressure midday. So CWEB is a watch right now, especially if it fails to hold this lower band of support. Now, what if it doesn't reach 62 and we begin to rally? We'll buy on a close above 69.08 using the stop right below it. Momo, weekly chart. We have a breakout on a weekly basis out of a pennant formation. Stokes are rising, RSI is rising, good stuff. Volume poised to come in above average. We have 2 trading days left to go this week. Daily chart. We're consolidating here. I think this 30 level looks like really good support. If the market weakens up, you should expect a pullback here and a retest. I think that's your opportunity to open up a position. And given early stage bases such as what Momo is in right now, it's not going to be unusual to pull back and retest this support level once, twice, and then move higher. So I would wait. I would show patience. More than likely, you're going to get a retest of the support level. If it doesn't happen, well then, buy on strength. Buy on a breakout above 33.45. Just make sure that you have the markets moving higher along with it. TLT. This is the 20-year Treasury Bond ETF. It's a bull ETF, and it's weak. And I don't see any respite in sight of the selling. I mean, we have RSI making lower highs and lower lows. Same deal here on this weekly chart for Stokes. We have broken down below critical support levels on a weekly chart. So far this week, we've rallied off the lows of the week. We'll see how the week closes out. So is there any upside here? Yeah, there is some. The fact that we are at a critical support level, we've bounced off of it this week, is good. Now it's a question of whether or not we hold it, or do we fail? Do we break down? Now, if we hold it, we'll be looking for a sideways consolidation, and then we need to see a breakout above this upper band of resistance. Now, I'm of the opinion that the only way you're going to see bonds break out is if the Federal Reserve signals that they'll be the buyer of last resort. They stand ready to buy. They'll start up the printing presses yet again. It'll happen eventually, but in the short term, I don't see that happening. Volume this week is going to come in well above average to the downside, assuming we close negative. So I would avoid TLT right now. Alibaba. They report earnings today. So I would wait to see how earnings come out before I trade it. I'm not a guy that likes to trade into earnings unless, of course, we have an extreme overbought or an extreme oversold stock. Absent that, I avoid trading an earnings call. Now, the weekly chart of Alibaba is looking good. We had a strong breakout last week. We haven't cleared resistance yet this week. Earnings are going to be the powder keg that either sends Alibaba lower or higher. It's as simple as that. The weekly chart is looking really good. Daily chart, we pulled back with the market on Tuesday, rallied yesterday, but we did not put in a new closing high. Volume was strong. I think the best time to take a look at Alibaba is after earnings, because right now this picture could change so rapidly. It's ridiculous. In fact, they're reporting earnings this morning. They haven't reported yet. So we'll keep an eye on it, no doubt about it. PayPal, weekly chart. I like PayPal. The weekly chart's setting up really nicely. The trend is obviously higher. Daily chart, we're trying to break out above resistance. I wouldn't buy it until we close above 85.49. Yesterday we put in an intraday high, meaning We actually traded above the 85.49 level up to 86.32, but we failed to hold the breakout. So as I always teach members, it doesn't matter where a stock trades intraday. What matters is where it closes. That's a rule that you should never, ever forget. So yesterday's price action, while we traded up on the day, was not exciting to me. We need to see a close above resistance. Volume was high too. So PayPal is a watch. I think it's a buy on a breakout above resistance. Apple, they're reporting earnings today after the close. Now, Apple is not looking good. We have broken down. Let's update the chart. Okay, so the only line I changed here was I took the prior upper band of this triangle formation and I extended it out because it was resistance at one point. It then became support. It is now acting as support yet again. We will not ignore the fact that it has broken down below this lower band of support on a weekly basis, which is significant. But we are holding a support level, so I would not short into a support level. What I would be looking for is a rally off of this level and a challenge of the 180.10 level to see whether or not we break out to new highs or do we put in a lower high and roll over. If we roll over and take out this prior support level at 160, let's call it 166, it then becomes a short if we close down below it because the path of least resistance will have changed. We're not there yet. Let's let earnings come out. Let's see whether or not we rally or if we break down, and we'll take it from there. I wouldn't buy the shares into earnings. The chart is sending signals, and it has been sending signals for a while now, that it's weakening. All the indicators are rolling over. Daily chart. A really rough week. Last week and this week. Watch for a rollover and a double bottom setup on Stokes. And this was really in the cards. If you take a look at your RSI, let's get the crayon out. And this is what I always teach members. RSI is not simply an overbought, oversold indicator. It is also a measure of divergences, meaning is a breakout being validated? So as you can see here, we put in a high on RSI back in November, on November 8th. Ever since that point in time, while we've broken out to new highs, RSI has been making lower highs and lower lows. That's a divergence. Down volume is very high. So we have institutional distribution. And the rally that we saw yesterday was simply a dead cat bounce. We took a really hard shot to the chin on Apple. We bounced off of the third standard deviation Bollinger Band in red, and we simply had a dead cat bounce. I see no strength here, despite the fact that we saw an up volume bar, which came in above average. Remember that we closed well off the highs of the day. So 168, which was support, is now resistance. So be careful here with Apple. I'm not saying to short it today, not in advance of earnings, but I wouldn't buy it either. I would rather buy on strength. And that's it, folks. Everybody have a profitable trading day, and I'll talk to you soon. Be well.